Good evening, everybody. How are you today? Welcome to the market strategy session for Sunday, August 16th, 2015. I am Michael Saul, also known as Tiny, and I will be joined shortly by my partner at Winning Edge Trader and paulandsaul.com, Paul Schatz. What a week! China devalued the currency 2 days in a row. We got a flush out on Wednesday in the U.S. market, but in the end, big reversal, and we're still in our range. Just amazing. Gives new meaning to the word summer doldrums. My opinion is that we are going to chop around heading into what people are thinking is going to be a rate hike in September. Paul does not believe that occurs. I do not believe that occurs, but a lot of people do believe it occurs. So that is what people might be waiting for. Okay? I don't know. All I know is it's frustrating if you are looking for overall market timing. However, there are still individual stock setups that you can look for, both on the long and short side. Let's look at the economic reports this week. Nothing Monday except Empire State Manufacturing at 8:30. That's building permits on Tuesday before the market. Wednesday CPI, core CPI, but the meeting minutes at 2 o'clock. Now, a lot of people talk about the meeting minutes the same as the FOMC meeting announcement. It is not the same. However, it can have movement because some people, they can interpret what's being said as, oh, it's dovish or hawkish, or I don't even know the difference between the two, to be honest with you. Birdish. They're both birds, and hawks eat mice, and doves, I don't know. But, well, this one voted against it, and it gives more weight that there will be or won't be a rate hike in September. Like I said, I don't think there will be one because Paul doesn't think there will be one, and Paul is good at crunching the numbers and doing all that stuff, looking at what would be determining for that rate hike. And I'm not. I'm a big believer in accentuating your strengths. Hold on. Sorry. Um, so I'm a big believer in pressing your advantage and trying to get better at what you're weak at. But if you can't get it working, you got to eventually cut it loose and go with your strengths. And my strength is technical analysis. Doesn't mean I ignore the rest of the market. Doesn't mean I ignore the economic reports. Doesn't mean I ignore fundamentals if they're coming into play for a longer term decision or the story behind the stock, right? That's why I'm a big Disney guy. I'm not calling Disney long here or anything like that. It's in a little bit of trouble here since its last earnings, but my kids all own Disney, and I like the story behind Disney. So I'm not saying all that doesn't come into play, but my strength is technical analysis, okay? You'll all get a email pretty soon, and I talk about Dan Gable. Anybody know who Dan Gable is? Anybody? Anybody? Clark's grandson. Good. It's close. No cheating. Don't Google him. Yeah, he was. But did you cheat? Did you cheat, Karen? Tell the truth. Okay, yeah. Dan Gable is a very famous wrestler. He holds the records. He had one losing match in all of college. He won the gold, which was his last one, by the way. He won the gold at the Olympics. He's coached Iowa to a bunch of titles. Anyway, yeah, the Olympic guy. Anyway, he has a famous saying that I love, and he says, if something's important, do it every day. If something's not important, don't do it at all. And it's the saying I try to live by. Unfortunately, I don't. That's why I still have a Facebook account. If I lived by that code, I would not have a Facebook account, and probably a lot of other things. I probably wouldn't have Amazon Prime or any of that BS, or Netflix or anything like that. You know, it's funny. I was at the gym the other day, and I walk in with my kids, and this hot mom that's there. She's really really cute. She's like, "Oh my God, are those your kids? Are those your kids?" And I go, "Yeah, they're mine." She goes, "All three of them? Oh my God!" And I said, "Yeah." And she says, "Oh, so we start talking about kids and all that, and I start saying, my kids haven't watched TV in 6 months." I said, "But before you think I'm the greatest dad ever, it's because they're freaking glued to the tablets." So don't, I'm not saying that to brag like I raised my kids so great that they don't watch TV, but seriously, my wife is like, we have to get rid of the cable box because we do not use cable. We do not watch cable TV. It's like the most amazing thing ever. Anyway, I don't know why I'm telling you that story. But anyway, so, oh yeah, back to Mr. Gable. So to me, the most important thing in my trading is going over the charts. And that's what I want to do. And really, it's knowing what the economic reports are, learning about what a CPI, PPI, Philly Fed, and what it measures. It ain't important because it doesn't influence me. Knowing when they are is important, of course, right? Knowing when the FOMC meeting is, knowing, the job numbers are kind of easy the first Friday with an exception every now and then. But, knowing what the PPI means or what happens if the unemployment claims uptick for 3 months in a row, it's horseshit because that stuff changes anyway. Not what the PPI is and what the CPI measures and what the GDP measures. That's not what I mean. But, every time this has been up 3 times in a row, we've sold off until it's not. But with Paul, it's important to him because he's a broader thinker and he's a bigger picture guy, and he's all over the media and TV, so he has to talk about this. I can't get on TV, not that I'm ever asked, but because I'm really have a face for radio, but I can't get on TV and start going when they go, "What do you think of the GDP?" and I go, "Nah, just look at the chart." Yeah, they're not going to invite me back. So, and I'm not saying it's not important stuff. It's just that it's not something that I was very good at learning about all that stuff. It's like Elliott Wave. For years, I tried to learn Elliott Wave. I couldn't figure it out. I kept going on it. And yet I'm sitting there and I'm saying, you know what? Just cut it freaking loose and focus on the stuff that you're good at and continue to to continue to work on that. But anyway, so I am concerned about reports that happen during the day, during the trading day, because that can influence you, especially if you're day trading. At 8:30, I'm not a pre-market guy, so I don't really care. Hold on. Oh, goodness. Paul can't get in. Hang on one second. Hang on one second. Da 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 da. Hang on one second. Ugh, goodness. Sorry, folks. Okay. All right. Sorry about that, guys and gals. I just have to get Paul in here. So let's see. All right. So let's continue. Philly Fed FOMC minutes Wednesday, Philly Fed Thursday, and then nothing really on Friday. All right, hang on, guys. I'm sorry about this. I'm still here. Just Paul is at Cape Cod or wherever the heck he is, so he's, I don't know what the heck he's doing here. Hold on. By the way, last week the recording didn't work. I'm hoping this week it does because I got a lot of pissed off emails. We got a lot of people that watch it, but I can't help it. Oh, he's here. Okay. So let me hand it back over to him. We went through that. Here's Paul. And I will talk to you soon.
Okay, good good evening. I'm a little disorganized, so give me a second. Okay, so I'm on vacation and I'm trying to get this working. I did not hear Tiny sign off, so I assume he left and I'm not talking over him. But if you guys can do me a favor and no, to Tiny, I don't see any of the I don't see the question box. So Tiny, I do not see the question box. Okay, good. Sound is fine. There we go. All right. All right. So here we go. Let me just. Hopefully the bandwidth here, which is anything but strong, will last us for our time together. And if you have any problems, just post them in the question box and we'll figure it out. Okay. All righty. So it's Sunday night and the futures are doing what a shock, absolutely nothing. It's been a long time since we have had any kind of consistent movement from the futures on Sunday night. That will change one day sooner than later. So let's start with last week. We came in with a bearish tilt, waiting for reversal, and we certainly got that on Wednesday. We had a bad day, we had a decent day, and Wednesday we got our reversal day. So that's my theme right now is Okay, so that's Sam, you're not seeing my screen? Hold on. Eh, So JN says he sees my screen. I am Sam does not see my screen. So right now, if I'm doing this correctly, you guys should see the your screens are filled with all sorts of tiles. Nandita sees the screen. Do not see the screen. This is odd. Nandita sees XLU. Yes, screens are fine. I see the screen. Okay, so most people see the screen. Here we go. So right now, this is a chart of the Dow ETF, DIA. All right, so if you don't, everyone sees the screen. If you do not see my screen, leave the meeting and come back and reboot. Okay, so Sam's doing that. Excellent. Joe, give that a shot. Okay. So here's a Dow. Let's spend a couple minutes on it because they're all going to look similar. Wednesday's reversal was pretty dramatic, which is right here. Okay. What did Wednesday's reversal do? Well, it cleaned out all the stops from the week before and any remaining stops below the market. Now, what was I looking for? I said I wanted to go sub 17,000, which was sub 170 in the DIA. Did we get to sub 170? No, we got pretty close, but we didn't get there. So where are we now? Oh, let's continue. I'll talk about that as we go. So that's the Dow. Here's the S&P 500, IVV, same reversal. So I'm going to ask a question. Don't answer it yet. But what's my theme from looking at the Dow, the S&P, the mid caps, the small caps, and the NASDAQ? So here's the S&P. We got a reversal, and we're literally exactly in the middle of the range. Does anybody have an edge? No, nobody has an edge. Here are the mid caps. Kind of sort of the same. Here's your reversal. Close right here, kind of sort of right in the middle of the range. Here are the small caps. Another reversal. And here are the Qs. Another reversal. So what's my takeaway from the short-term charts and the 5 reversals? So a couple people cannot see my screen, but most people can. So my suggestion is to leave the meeting and then reboot and come back in. Let me know if that does anything else. So post your comments of the 5 index charts and tell me what you think. It's a catch my breath. So today was kind of sort of day 1 of vacation. It took us 4 hours to get out of Connecticut yesterday, which it normally takes us an hour. It's 60 miles to the Rhode Island border. And they closed 95 in both directions all morning long, so we decided to give it a go anyway, which is a really stupid thing to do because we sat. Then we tried to play Magellan, and we drove about 50 miles out of the way to try to go around it, but didn't really work. Okay, people are still posting comments. So we didn't get here till late in the afternoon yesterday and ended up at the supermarket doing all that kind of stuff. But today we got a full, nice, beautiful day and on the beach in the sun, lots of cocktails. Okay, so let's see. Range-bound trapped by the bulls, hanging in the range, short-term bullish. They're all going to decline together. Lots of chop. Dow is stair-stepping down. bullish change to the market, indecision. I think all your comments are probably dead cat bounce. I think all of your comments have validity. What I was trying to get at was that the major indices are all not in gear together. You have a weak one like the Dow, which is way down there, to go along with the small caps, which are way down here. They've seen the biggest declines. But the Qs, I mean, haven't even really corrected. The Qs came right back into Qs just came right back into support. So what I'm trying to get, and the mid caps are kind of in the middle of those too. So you do not have the indices in sync to the downside. Some have made lower lows for the third time, a la the Dow and the small caps. The Qs haven't made a single lower low yet, and the mid caps and the S&P are in the middle. So we do not have the major sectors in gear in any direction. Scott, we have no leadership. Well, Scott, I think until proven otherwise, you have to view the Qs as the leader of the major indices. So in the very, very short term, the Qs did not trade well on Thursday and Friday right here. They made no headway. So that's not good yet. The S&P is the highest level since last Monday. So you can't even call it a dichotomy. You have no consistency in the major indices. So the market's not tipping its hand yet. So my view, in short, is that here's the S&P. I really want to see this low right here, the July low. I want to see the S&P rally and then roll over, and then at least breach this low, and maybe it closes this gap over here. Maybe it bottoms somewhere between 1990 and 2040. I mean, it's all supposition right now. We've got to wait and see it roll over first. That's what I'd like to see. Sometime in September, I think you get a rush of negative sentiment, and I think that'd be really bullish for the market for the fourth quarter of the year. Can't believe we're talking about the fourth quarter of the year, but here's Europe. What's Europe? Really nothing. I mean, it's a pair of twos at best. Get a lot of open gaps. One open gap. Two open gap. We get an open gap above. So there's nothing with Europe at all. Nothing going on with Europe, period. Emerging markets have been decimated, as we know, and they're trying to put in a trading low. I don't believe this is going to be the low of significance. I think it's a low to sell off of. So there's nothing really. It's really oversold. But if we bounce, 5%, this thing could roll right back over to the downside. So I don't think we're bottoming just yet. Here's China. Nothing going on. It looks bad. It's probably going lower. I think eventually when they open their markets up fully, we're taking out this low. India, which some of you guys like me to pull up. It looks better than China, but certainly it's not bullish yet, but better than China. Russia, which I know you guys like, and I still don't. We're down, 25% already? I think Russia still, any rally can be sold, and I think Russia's going lower also. So the emerging market theme is some are more constructive than others. I think we looked at the Philippines you looked at. Nope, that didn't hold. So this, before last week was possibly constructive, and now we got new lows, nothing constructive there. Let's change parts of the world and go to Peru. Oh boy, wow! Look at the action. I didn't even see. Look at the action on Friday. That was nightmarish. So there's not. I don't know. There's nothing here in the emerging markets that inspires any kind of confidence whatsoever. Commodity-based economies are getting killed. It's not just commodity-based economies, Robert. I think it's the whole emerging market space. It's a couple things. One, it's if you're a commodity-driven country, but look at Brazil. Okay, Brazil. Let me see if I can shrink this up a little bit. There we go. Brazil had tried valiantly to rally, even in the face of lower commodities. This is a nice rally in Brazil. Couldn't hold. But it's not just commodities, guys. This is any emerging market country that has debt denominated in dollars is getting hit. So you've got a kind of a confluence of negatives in the emerging market space. And I'm very glad that I blew all my emerging markets out. Wish I did it earlier, but I'm not that good. So let's see. Let's go to the key sectors. Banks. Not a very impressive reversal day. Maybe I'm being too micro and too nitpicky, but banks I still like the second half of the year. I'm going to say that until I'm blue in the face and proven wrong. I like this activity here. I think banks have a big run left. Would I buy them now? I may nibble. I don't own any. I'm not going to buy them yet. But if you wanted to nibble, you could nibble here. You just got to have a very tight stop in on banks. I love how Wednesday's action blew out this low here. But they're not bullish. They're neutral at best. Trannies still stink. Wait till I populate the screen. Here are the trannies. There's nothing redeeming here yet. I'd like to see the trannies roll over one more time. And maybe we go like this. Oops. Maybe we do this. And then we do this. That's what I'd like to see. Trannies roll over to the downside one more time. And then maybe, finally, the trannies can get us a nice big 20% rally, but they stink. Here are the semiconductors, and guess what? They stink too. Look at the last 2 days of action in the semis. Market reversed, market began to run, and the semis stink. Yes, we have divergences. But that is not a confidence-inspiring bottom just yet. So there are three major sectors do not look great. But software continues. I've said this for like a year. It just continues to hang in. The software just looks good and trades well. So nothing really to do there. It looks good. People are hiding in software. Telecom, which was one of my sectors of the year and kind of embarrassed me for 6 months, at least is percolating now. And why is it percolating? It's percolating because fixed income is percolating. And the notion of a heating up economy has been thrown aside, and now we're back to less than mediocre growth. So IYZ looks okay. XLY, I've written about this. If you, it's on my blog. think I put it here. If I didn't, I'll put it here on Monday. Come on. No, I'll put it up here tomorrow. Okay. So here's XLY. It's done nothing wrong. I mean, it's still right near a new high. It's a 1 week rally. It's still leading. The consumer is far from dead. It's one of the last sectors standing. Retailers, a subsector of the consumer discretionary. You've got lower lows and you've got two reversals. So I would give the nod to the bulls right now. Maybe they can get going in here. Kind of doubt that we're going above par, above 100, maybe. But we'll see. And home builders, another one of my sector picks of the year that has not made me look stupid. Trade's great. New highs on Friday. I've been on this sector all year long, and I think it's going to go higher. Again, it's a buy into any weakness. Let's see what else. Energy, oh my God. Not a good week for crude oil. Here's the XLE, which is bouncing nicely, but not a good week for crude oil. OIH, which I continue to own a small position in, and it's been frustrating, and I've clearly not made any money from it. So eventually I'll either get frustrated and wipe my losses out, and then it will rally, or it will get a rally in it, and I'll sell into the rally, and then it will go higher. Either way. But there's really nothing to talk about here. XLI and XLB got pounded and then have bounced. Do I want to get involved with them right now? I do not. I think they're a best case neutral, worst case we'll sell into a bounce, but nothing redeeming here, and certainly not in XLB, which I've been off of all year. So that's been a good call this year. But I think you keep selling rallies in XLB. It's kind of like when Dustin Johnson, whom I like, goes low in a major. You could just short him because until he wins the big one, he keeps choking. So today, Jason Day, whom I love, finally got off the schneid and won his first major, which is nice. Good guy, speaks well, seems really humble and gracious. So XLB is Dustin Johnson, short the rallies. Let's see what else I missed. XLB. The defensive stocks, staples are percolating, which is not good long term, but they are percolating. They've gotten off their tushies and reversals okay. No follow through. This is the big candle that matters. XLP needs to close above 51 to really get bullish. IYR, which I've owned for a while now, at least a month or so, had a nice week. I still own it, and this is more of a defensive play like IYZ. Bond market's rallying, all the dividend-paying stuff are rallying. And XLU, which I sold half of, and I'm holding the other half, had another great week. Last week we spoke about XLU and the utilities trying to get above here. And while it technically did on Friday's close, I mean, it's not convincing yet. I would think that we do something like this. Maybe we poke above it, and then we pull back, and maybe then we get to go. But I'd be surprised if we ran right from here because you got such overhead supply. I would be surprised. And the last two I still own, which is XLV. Still bullish. Not the greatest, but it's still bullish. Looks okay. And biotech I still own as well. I'm getting a little concerned on biotech. I don't love this succession now. I got a lower high here. Don't like that, and I do not like this 1 low, 2 low, a steady stream of lower lows. I don't love that. As you know, or those who've been here for a while know, when something makes a high like this and then pulls back, I can't stand it when they rally back and then lose the rally before getting to new highs. This is not a good setup. This is the same setup, but every large decline that I've ever seen begins like this. They don't all end in a large decline, but they all have this failing rally, and they just cut them loose. So we've got a couple of reversals within a week in biotech. If we close below last week's low, then I will lighten up at least half, if not all, my position. And I've held it all year, and I think I've owned it. I think I've owned biotech since 2012. Maybe I've sold it once or twice. All right, so let's see. Any other sectors? GDX. I do not own in my short-term program. In my aggressive program, I do own it, but I own it at much higher levels, and I've gotten bludgeoned in it, to be fair. So what do I think here? I mean, this should not be the peak. It's a rarity when tall green candles signify a peak, but this is crummy action here, too. What the heck is that? Okay, look outside. Is that a tow truck? Okay, so those are the sectors. Let me just pause and answer any questions that we have on indices or sectors. Hold on one second. When do you think emerging markets will eventually turn around? What? Oh, Peapod? Adine, I don't know. It depends. Let's say if we get another decline this quarter, I would say it depends how the decline unfolds. If the decline unfolds with the dollar rallying sharply, I'll have one answer, and if the decline unfolds with the dollar not rallying, I'll have another answer. But I'm not really sure. I have an opinion on that yet. Aren't we in the Oh, Scott, we are. Yes. So, Scott, I think you're referring to my couple of picks for the second half of the year, like banks. Yes. I like banks. I said the second half of the year play. They've already rallied, and now they're in this digestion mode. And I think when the market gets ready to rally again in earnest, banks will be a group to play. In 1997, Southeast Asia took it on the chin, and it spread to world markets. Can U.S. avoid getting whacked by China's market troubles? Mike. So to get the full color, the Asian crisis that we saw in 97 and 98 actually began in 94 with China devaluing. China devalued, it was like 25-30% in 94. And it took 3 years for that to really manifest itself in the U.S. markets. Now, we are a lot more connected today than we were in 1994. That's 21 years ago. Then we had the Asian contagion in October of 97, and then we had Russia defaulting and long-term capital in the fall of 98, and they're all intertwined. So if China goes down another 10 to 20%, whacked is a relative term. I don't know what whack means, but in point term, I think that the S&P is going to find some kind of bottom between 1970 and 2000, worst case. So it'll feel worse than it actually is. That's my view. Oops. Let's see. Let me go on. So Scott, call credit spreads in IBB. Scott, I don't know if I would stick my neck out on call credit spreads just yet in IBB. I mean, I guess for me, I wouldn't do anything right now. If I owned it, I'm holding on, but it's hard to add any more exposure to IBB right now. Benji, my question screen appears on the screen and then closes halfway. Could you place your question? All right, Benji, tell me if this works for you. Benji, how does that look? No, Scott, I agree with you. China wasn't nearly as developed in '94. It is faster and harder now, but don't forget, in '94 they devalued 25, 30%, where today it's a fraction of that. It's not that, and it's not that China is more developed; it's that the markets are more intertwined. China didn't matter that much back then to us, but it certainly matters today. Let's see. All right, thanks, Benji. Rick, TLT, I'll get to in the next segment, so hang in for a minute. All right, so now let's forge ahead. We covered stocks, sectors, and now we'll go into, we'll do gold. Now let's do bonds first. Here's TLT. I said it last week. It trades constructively. You can't argue with it, but I'd have a tough time paying up to here for it. So now it's beginning to roll over. Maybe it's pulling back. But bonds, the whole bond market, except for high yield, to me, looks decent. Here's a 10-year note, which my forecast for the year was 150 on the downside down here and 230 on the upside. So far, we overshot my upside target by 10%. I mean, it happens. I do think that these lows are going to be taken out. I do think we're going to come down, get under 2 once again. Maybe it'll take the end of the stock market decline to do that. Munis, I'm watching. They've rallied enough already, but I still think munis are value down here. I like the way it's consolidating, so I'm looking at munis to play. Here's what surprised me. Investment grade corporates have not rallied at all. So either it's a laggard play and LQD is going to rally significantly, or there's the first time in a long, long time, something else is at play. I don't know what that might be, but LQD should be up, in 118 already. Let's see. Oh. All right. See, Johanna, you said I forgot your question. Just repost it for me, and I promise you I'll get it on the next round. So let's go and look at junk. So here's JNK. Anybody want to make any comments about JNK? Bad. Ouch. Death cross. Stinks. You guys are funny. So, it's been bludgeoned. This is a huge decline. However, you did have a nice reversal on Wednesday. And obviously, J&K absolutely must hold now. This is where the bulls must put up a stand. So I don't have a position in it, but this is a nice decline to buy into, and I'm kind of frothing to get to own some J&K, but I'm not going to buy it yet. I want to I'd rather see it rally a little more to confirm this bottom before I hop in, but boy, this has been bludgeoned. And yet, the plain vanilla mutual funds that I follow, like the PIMCO High Yield Fund, have not. So it's down, but not nearly like JNK. Before I go back to the questions, let me do my best to pull up the AD line. Oh, shoot. Why didn't that work? Oh, candlestick. Didn't work because I put it in the wrong spot. So as I am setting this chart up, I woke up this morning on day one of vacation. The muscles on either side of my spine, in the middle of my back, were in total spasm. That's a crummy way to wake up on day one of vacation. And I had a pinched nerve in my neck and couldn't move for the first 3 hours. It was a great morning. And I'm nowhere near, obviously, my chiropractor. There we go. So hopefully I'm going to get a massage tomorrow morning and try to work it out. But it was a very painful day. The only good part was I had enough cocktails that took some of the edge off. Okay. Why did the moving average not go away? The 50-day. So if anybody has any home remedies for a pinched nerve that starts in the back left of my neck and goes all the way down where my shoulder blade meets my muscles in my back. It's like 1.5 feet long. All right, here's the AD line. So if you follow me on Twitter, what I've said during this whole period of August is that even though stocks have declined, the breadth measures have been much better on the last decline. Don't get fooled that just because breadth isn't as bad means the market has to rally. In 2000 to 2002 bear market, the AD line bottomed, I believe, in December of 2000, and yet the bear market took another 40% off the market as the AD line rallied. So don't get caught up don't get fooled by breadth not being as bad during the last decline. And let me see if I can pull up the NDX. Yeah. So here's the NDX's AD line, which is essentially the Qs. It's still not great, and the Qs look a whole lot better. What the heck is going on here? The Qs look a whole lot better than this does, which means, as we discussed last week, you look at Netflix, and you look at Google, you get the picture. The Qs are being held up by a few stocks. Apple's not one of them. So I think last week I wrote a blog about Apple specifically, and I said that the bulls are getting all frothy and foaming at the mouth right here on the reversal day because it also came with high volume on Apple. Okay, over 100 million shares. I still think that until proven otherwise, Apple may rally. Maybe it rallies into, I don't know, the mid 120s in here. I guess it could fill this gap. It'd be a little farther than I thought, I would think. But I think this is headed down to par. I think it's headed back down to here before the next good rally starts. Okay. So let's go on. And then I'll stop for questions in a bit. So we did the bond, we did fixed income, we did equities, we did sectors, we did, let's do the dollar, which I'm going to tell them the same thing I told you last week. I'm still bullish in the dollar, intermediate and long term, short term, it's a pair of twos. So whether we pull back first and then go or go sooner, I think we're going above these highs. The dollar's been consolidating nicely. Gold had a big day I think it was Wednesday. Yep. Gold had a big day last Wednesday. And it did hit my target of, I said it for months, sub 1100. Do I believe this is the bottom yet? I really want to say this is the low, top on board, because there's always gold bugs in every group. But usually, gold doesn't bottom like this. It bottoms a lot more sharply one day. So I am undecided. Sorry, I don't have a strong opinion on it. Crude oil stunk last week, and here it is. Nothing redeeming about crude oil from last week. We're back to the lows. I would expect a bounce this week in crude oil. Regardless of where it's going, I think we're going to bounce first. It's been bludgeoned. It's ripe. It's right at the lows. Time for a bounce in crude. Natty gas. Same comment every week. Eventually, we're going to have a huge rally. This just continues to go sideways and percolate. Copper. Here's copper. And what strikes me about copper is you have some really big volatility last Monday and Tuesday. Wednesday was this beautiful hammer. Copper's supposed to go right now. This is the time, if you're at all a copper bull, now's the time where copper should give you, a pretty big run. Fairly quickly, too. Closes below the hammer, you get out, but there's all kinds of positives down here, and smart money's been long. Not that it hasn't mattered, but that's FYI. Let's see what else. Copper, we did all the energies. Euro. Would I rather be long or short? I don't know. Longer term, I think we're going to go way below this low. But in the short term, it could go either way. I have a strong feel. Longer term, I think we're going to go down to 90, 85, 80 on the euro. And the yen, I can't stand. I think it's going to go much lower. I think you can short every rally in the yen, and it's going to go another 25 to 50% lower. Let me pause and go back to some questions before I finish up with the tropicals and the ags. Hadeen said, if J&K goes into a bear market, how long of a lag do you think it will be until equities go into a bear market? Great question. And Hadeen, that's part, and I know you're part of it anyway, but that's going to be part of my bear market class, which I've got all of my information ready. It's not, I didn't put it all on my PowerPoint deck yet, but I've got all the information ready for the bear market class. I like to do it during the next rally. So when we get a rally of significance in stocks, I'll probably get the bear market class. But I think the answer is there's huge variation on how long the market can stay up with high yield bludgeoned. What does all this mean for interest rates? All right. So Scott, you know this because you've been following us for a long time. I've been in the dovish camp since 2007, and I still do not believe. I said the same thing every single year. In this 8 years now, the Fed should not even contemplate raising rates. I guess the market opinion is it's 50-50 on a rate hike for September. My opinion is, given crude oil's decline, given China devaluing, given the dollar's relative strength over the last 6 to 8 months, I don't think the Fed's going to raise rates in September. I think it'd be a huge mistake, and I don't think they're going to do that. And the rally in utilities and staples and the bond market tells you that they don't believe the Fed's going to raise rates either. Nandita, AD line flattening out. Yeah, it is, but it could be just a shelf for the next move lower. Scott says ketamine. Isn't like a horse tranquilizer? Neck rolls, 5 at a time. Each set. Really? Neck rolls, 5 at a time? I used a neck roll on the beach today. I rolled up a towel, stuck it under my neck, and couldn't move. Oops. Try to get this out of the way. Benji, thank you. I followed almost all of your advice. I got the Advil. I turn my back with my feet. I don't turn my neck. I agree with everything you said. I just can't sleep on my back. I've always been a side sleeper, and then I wake up because I'm in pain. There's no shot. I'm 49 years old. My days of sofa sleeping or sleeping on the floor or any of that nonsense ended when I turned 40. Thank you very much. And ice packs, yes, I do that. Love the ice packs. Oh, Nandita, I've got plenty of. I started drinking this morning at 11 o'clock because I'm in so much pain. So I agree with you. Thank you. Deborah asked about, have I read anything about the Shemitah year and it being a jubilee? No, I have not. September 23rd. There's all kinds of people, all groups pointing to like end of September to middle of October. Now I know, I forgot which one of you guys was a fan of that clown. Sorry, but he is Stansberry. He's the biggest. He's got Ron Paul doing ads on TV. If you want to follow a clown and a person, in my view, my humble opinion, is the worst thing for your money, you could follow that guy. But everyone's talking about the world coming to an end in October because the IMF's going to make China a reserve currency. Well, I don't know how the IMF truly works, except that they're probably as dysfunctional as the UN. But given China's manipulating the currency in the last week, I really can't believe they're going to make China a reserve currency. But I honestly have not done the homework on how the IMF used it. It doesn't matter. I think China's currency, they're the biggest manipulator alive. But Deborah, if you have information on this Shemitah year and it being a jubilee, feel free to email it to me. Happy to take a look. All right, Benji. I saw your. So when I feel better, keep taking the meds, Advil, and for. Yeah, my buddy who's a pain man doc was gonna call in a script for me. See how I am after massage tomorrow. Ooh, Deborah's sticking her neck out. I think gold's gonna run for some time. I think gold is set up for a significant rally, at least for the next 6 months. Will it get there? It's not instilling any confidence yet, but we'll see what happens next week. Benji, I just bought some. What did I buy? Zantac, because the Advil does bother my stomach. So I just take that. Got that, and I got the purple pill. Lay down in bed with neck over edge, just helps decompress the nerve. Yep, I did that. I did that upside down in the ocean today. That felt great. is hanging off. Will China drag down Europe? Yeah, I think if China goes down another 10 or 20%, yes, I think Europe's going to go down a fraction of that. But yeah, we're all going to go down if China goes down that much. Am I looking for another high, Deborah? Yes. I do not believe the bull market high. Well, I said this for so many years, and I've been right. When we finally turn from bull to bear, I'll probably be the one, one of those idiot perma bulls saying, no, 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 we're still going to new highs. But I got down 20,000. I still have my target. So I am looking for more to come on the Dow. Yeah, Benji, I don't have I don't have a lot of commodities stuff in my bear market class. But historically, lower commodities have done good things for stocks. But let's not forget that higher commodities do not spell disaster for stocks either. It just, when they get too high, let's see, I was trying to pull up a whole decade. Maybe there's, okay. Still can't get it. Oh well. So, I mean, stocks bottomed here, and commodities went up almost 100%, and so did stocks. So they both rallied together. But overall, higher commodity prices are not a tailwind for stocks. Lower commodity prices are. But it ain't working lately. It's like when people say, whenever a strong dollar is bad for stocks. No, it's not. Absolutely it's not. Sometimes it is, and sometimes it's not. Oh, Scott, you're serious? Oh, Scott, you're kidding. Okay. Sleep with pillows under my legs? Really? Okay. Yeah, no, Johanna, I am missing my Tempur-Pedic bed at home that my wife hates and I love. Oh, yeah, that's what I was going to ask you guys. Maybe have any of those. I went to CVS. I didn't know if any of those icy hots or any of that stuff works for a pinched nerve. I did not buy anything because it would have been a waste of money, but I'd love to know what people do with that. All right. So let me move it, Benji. Let's see if we can take this away now. Yeah, so I'm on my Apple Mac, my MacBook, whatever it's called, which has Windows on it. I'm not on my regular Dell. Yeah, and Indeed, loves guns and gold just in case. Yep. All right. Oh, Joanna, I keep ignoring your question, and we'll finish up so I can get a bourbon. Okay, your question was on XLY. What was that last? Let's see. Johanna wants to know. Scott, I'm calling Apple to par. Yeah, I know. I'm not an Apple person. You guys should know that. So, Johanna, here's my take on XLY. You have a beautiful reversal down here. It must stay up. I mean, closing below this low there'll be trapdoor selling. So closing below this low, you will see trapdoor selling, meaning you'll get a quick move, probably down to 74 or something. So this low, I think, is really key. But XLY, if the market hangs in, this thing should rally. Maybe it makes a failing high up here and rolls over again for the last time when the market does. So yes, this candle is interesting. But every single indices in every single sector has had really good candles on this Wednesday. Canoe, you will get the recording. Tiny will have it up as soon as I finish, and then you can listen to sectors and the markets and bonds and commodities and the trials and tribulations of my pinched nerve and back spasms. All right, so let's go on to the last couple of things. We are going to do, these are wild, all these commodities. Here's wheat. Hard to own wheat right now. Hard to own wheat. So nothing there for me in wheat. And corn, same thing. I think corn had a really nice 2-day, yeah, there's the 2-day move from that global crop report. Hard to own that up down here. I think it's too volatile. We want to let it shake out for a little bit. And beans, kind of sort of the same thing. Global crop report showed an awful lot of supply in the market. So if one thing that's been shown to be good, I'll call it global warming. But if, let's say, the overall warmer planet has done wonders for the ags, although if you go look at the polar ice caps this summer, we have the most amount of polar ice we've had in a long time. So that the climatology argument of the polar ice disappearing has been at least put on hold. Coincidentally, as I saw Al Gore on TV this morning. So let's go to the tropicals, and we'll call it a night. Like I'm babbling. So here's sugar. We've talked about this every week. Look for signs of a bottom reversal. I mean, you kind of got a little bit here. So if I wanted to play sugar, what would I do? I'd be long right now with a very tight stop at the lows on a close. So you're only going to risk a little bit for potentially a big move in sugar. The anti-Starbucks play, we talked about looking for a bottom. Big week last week, 1, 2, 3, 4, 5. Came into last week here, and coffee is trying to rally. Is this the bottom to rally from? I don't have that sense, but it is trying to rally. I don't have an opinion what we would do with it, but it is trying to rally. What did Starbucks do last week? So Starbucks did not respond really negatively to coffee rallying. Interesting. Cocoa's been the different animal than all the rest because it had this huge run already. And as I said last week, 1, 2, 3, 4, 5. This is where you could have bought cocoa, and your stop would be very tight just below this low on a close. It never did close below this low. So technically, you'd still be in cocoa looking for a rally this week. Cotton, been very frustrating. Lots of fits and starts. Had 2 huge days last week. Could you have telegraphed these? Not in my opinion. There's nothing here to say, oh my gosh, cotton is about to blow off for 2 days. So I don't really have an opinion on cotton. We did cotton, coffee, cocoa, sugar. Oh, that's it. You get them all. Okay, last call. Johanna, you're welcome. It's my fault. I didn't ignore it. I kept forgetting it. So last call for questions. Let's see. Mike, short term, intermediate term, long term. 1, 2 weeks, 6 weeks, fourth quarter. S&P, my gut feeling. Well, if I don't have a gut feeling, I don't have anything, right, Mike? Short term, I think we rally. Maybe we got another couple of percent left on the upside. Intermediate term, 6 weeks, I think we decline and we put in a low. And then longer term, I do think the S&P is going to all-time highs again, fourth quarter. Joe must be coughing, I'm guessing. Yeah. Would I short it? I would not, because I've been looking to play it on the long side for months, so I would not go short up here. I just don't love the setup on coffee and the commodity. It's really hard for me to short coffee in this kind of pattern. It should go higher, but I didn't love how it's set up down here. So it's harder for me to buy it up here. In this setup, it should go higher. We should at least come up and test, whatever this level is, 1475 or so up here. But I would not, for me, I would not short it. I did wheat, Johanna. I think wheat, corn, and soybeans, they're too volatile right now. There's no good bottoming or top. There's no good anything. I'd step aside on all the ag. I know. Shoot, I missed the first 12 minutes of Ice Road. Well, I'm left. Ice Road, I thought I'd be off by 10, but so I won't watch it. I'll wait until I DVR'd it at home, so I'll watch it when I get back from vacation. But I'm traveling a lot. The next 3 weeks between this vacation and then next week I'm on the road in Massachusetts and Rhode Island again, and then the week after I am in Florida for probably 3 days, and then I think no more traveling until I go to Dallas in November. So if you're in any of those areas, let me know. Last call for questions and we'll wrap it up. Last call, going once, going twice. So just remember, you're in the middle of August. Volume should be lower than normal. Everyone's not in the Hamptons or in south of France. But liquidity is lower than what it normally is every year this time. And that's why you see so many crises pop up in the markets this time of year, because liquidity is light. Do I see anything on the horizon? I mean, China's the one where you could see some trapdoor selling, and that would lead to real spikes in vol and volatility in volume. But it will take some kind of geopolitical event to get some real big volume in the market. So the recording should be done May. Tiny's usually pretty good about getting it out in the next couple of hours. All right. Thank you all very, very much. Everybody's saying expect more China devaluation now, May. How's it going to affect us? It's going to add to volatility, and eventually their stock market will fully open, then it's going to go down significantly, and then it will bottom. So eventually we're going to get a really good buying opportunity out of China. Really, really good one. I don't think it's quite yet. And with that, I wish you all a fantastic week. And I am done. And I will be back next Sunday from a different location in Cape Cod with a different group of people. But now I got my family here, which is the best. So have a great week, and we'll talk to you next Sunday night. And Tiny, I am done.